What's up, everyone? I hope all is well today. Matt Garland, NMLS number 58700, but I'm better known as MG, the mortgage guy. So look, man, make sure before we get started on this video, make sure you guys like, comment, share, subscribe, and most importantly, go over to Instagram, follow me over there too, MG, the mortgage guy. So look, as we all know, the coronavirus is here in the U.S. It's a pandemic nationwide, globally, I should say also. And the last couple weeks have been just like a whirlwind in my business, the mortgage business. I mean, interest rates have been going up, down, left, right. So I decided to do this video just to kind of clear up a few things, because earlier this week, the Feds lowered the Fed's funds rates to basically 0%. And when I tell you, I probably received 1,000 phone calls this week from pre-approved buyers, from people in contract. I mean, uncles, aunties, from everyone thinking that they can get a 0% interest rate. So I thought it was very important that I came on YouTube Live and kind of broke down the difference between the federal funds rate and mortgage interest rates. So, like I said, as you guys are all aware, that the Feds lowered the Fed's funds rates. So let me give you some key takeaways about the federal funds rates. The Fed fund rate is the interest rate target at which banks borrow and lend excess reserves from one bank to another, right? A committee of the Federal Reserve sets the target federal funds rates 8 times a year based on prevailing economic conditions. Sometimes they have emergency cuts like we've been seeing over the last 2 weeks because of the coronavirus, right? The federal funds rate can influence short-term consumer loans and credit cards. Investors will pay attention to the federal funds rates because a rise or fall in the Fed funds rates can also sway the stock market in a positive direction as well. So, guys, I want you to really pay attention to those key points. And the most important thing is the federal funds rates can influence short-term rates on consumer loans and credit cards. Short-term rates being home equity line of credits, consumer loans, but not mortgage rates, all right? So now let's get into a little bit deeper about the federal funds rates, all right? The importance of the federal funds rate is one of the most important interest rates of the U.S. economy, since it affects monetary and financial conditions, which in turn have a bearing on critical aspects of the broader economy, including employment, growth, and inflation. All right? So when you're looking at the federal funds rates, again, it's looking at everything about the economy. It's looking at how inflation is, the growth of the economy, employment factors, and banks need to be able to lend to each other for reserves. So this is where the federal funds rates come in hand. It has absolutely nothing to do with your mortgage rates, all right? Just because they lowered them, they're trying to stop the economy from going into a recession, which quite frankly, I personally don't think they should have lowered the rates, because that was like the big joker. And I think the government played the big joker card too soon by lowering the Fed funds rates, in my personal opinion. Now, mortgage rates are tied to mortgage-backed securities, and most times we look at the 10-year Treasury as well. So mortgage rates right now in the U.S. have been hovering in that low to mid 3 range. So no, you will not get a 0% interest rate just because the federal funds rates are at 0%. Mortgage rates are looking at you, the person. It's looking at the property. So with mortgage rates, we're looking at your credit scores. We're looking at the property type, the loan program. But like I said, the mortgage rate that you're going to get, everybody who's going to watch this on YouTube, is more dependent on what you qualify for. Has nothing to do with the federal funds rate. So if you have a high credit score, if you have a low debt to income ratio, depending on the loan program, whether you're going conventional, FHA, or VA, that will ultimately determine what your interest rate would be. Now, right now, mortgage rates are still at a low. It's not an all-time low. But what happens when you see things like this happen in the market, guys, there are swings that happen every single day. What most people don't realize, mortgage rates fluctuate every 32 seconds when the market is open. So when you're quoted an interest rate today, let's say Tuesday at 12 noon, that interest rate really can change a minute later. If something happens in the market to swing, that rate can change. Your rate is not guaranteed until a lender locks you in. So I want to encourage anyone who's watching this today, lock into something ASAP. What's here today will be gone tomorrow. And if you do not act on these low rates, they could go away. Case in point, last week alone, the market, and if you follow me on Instagram, you guys will see that I do my best to try to keep you guys updated on social media when it's a good time to refinance, when it's a good time to buy, what interest rates are. But last week alone, the rates went to the lowest that I've ever seen in my life. I've locked in several people below 3% on 30-year mortgages, right? I have never in almost 18 years in this business, never ever locked someone below 3% on a 30-year fix, right? Incredible. But literally 24 hours later, those interest rates jumped up a half a point because the markets went in the wrong direction. Now, although the 10-year treasury was doing well, and the MBSs was doing good, the market still swung up a half a point. The mortgage rate market still swung like a half a point higher. There's no rhyme or reason. There's no crystal ball that any of us have. Interest rates, mortgage interest rates are all about timing, okay? You cannot predict it. No banker, no commentary, no one can predict where rates are going to go. You know, I get these questions all the time. Matt, do you think rates are going to go lower? Honestly, I don't know. No one knows. And me personally, I'm not waiting to find out. Lock in. If you can afford that payment and the rate is good, lock in. Because the same way you're waiting to save an eighth of a point or a quarter of a point lower, it can go higher by that same amount just as fast, I should say. Now, think about this, guys. We're at a low point right now when it comes to mortgage rates. There's only one way to go, and that's up. And I'm telling you guys this, and this is just from me, from my own personal experience. They will go higher than they will go lower. So lock in, lock in, lock in. If you're looking to purchase a home, you need to do whatever you need to do to put yourself in position to lock in. Because if you can lock in at 3%, 3.25%, 3.5%, those are still amazing rates. Now, what I'm going to probably do is tomorrow, I'm going to come on here again tomorrow, and I'm going to show you guys the cost of waiting. I think that's very important for me to show you guys. I'm going to do a Zoom call, and I'm going to break this down a little bit deeper. I'm going to show you what it looks like if you were to lock in with tomorrow's rates versus if you wait and if they go up a full percentage point. And I'm going to show you the difference in interest that you will pay more if you don't act right now. So I just wanted to come on here real quick on YouTube Live. I didn't want to spend too much time. I've been trying to get on here for 2 days, but it's been so busy that I really just haven't had time to come on here and talk to you guys. I'm a loan officer, like I tell you guys all the time. I'm not an internet guy. I'm a professional loan officer. This is what I do. I help a lot of people buy homes and refinance, and we've been bombarded with applications. So in the description below, if you want to know your options about refinancing, link will be in the description to apply for financing. If you want to know your options or you want a second opinion, or if you're looking to purchase a home, link will be in the description for that as well. But I'm telling you guys this right now. With this coronavirus, with everything shutting down, from all the sports leagues to, you know, the malls about to shut down here in New York. Macy's announced today that they're shutting down all stores. I mean, things are just going absolutely bonkers. We're being told we got to stay in the house. Obviously, I didn't listen because I'm in my office right now. But I want to tell you guys this. This is an opportunity. Do not panic, all right? Do not have fear. Do not let, and I'm not saying nothing about the coronavirus. I think that's a serious thing. I think we need to follow what the medical professionals are telling us to do as far as keeping ourselves sanitary, washing our hands, Lysol, disinfecting stuff, and just being safe in that matter. But what I'm telling you guys, when there's blood in the street, people get rich. And this is your opportunity right here, right now. A lot of you have been asking for a recession and been asking for things, and I've been telling y'all all year, you don't want that, right? Well, here it is. It's right here, smack dab in your face. What are you going to do with these opportunities right now, all right? This time while we all quarantined, are you sitting here learning, or are you sitting here executing? Are you going to have analysis paralysis right now? Or are you going to get off the pot and get to work and buy some real estate? This is the time right now when people get rich. When there's fear, when there's panic, stock market going up and down, uncertainty. But I guarantee you, I know a lot of wealthy people, and right now they are loving this because they are out here executing because people are desperate and people are scared. So take advantage of this opportunity because opportunities like this only come once in a lifetime. And if you are not ready to execute, then you must do everything in your power to execute. Stop paying attention to the federal funds rates. Stop paying attention to the mortgage rates. Execute because it's all about timing. Those things are important to know and to understand. Do yourselves a favor. Google about the federal funds rate and get more information because I only gave you key points about it. I didn't go into deep detail about the federal funds rate because I don't want to go over nobody's head, but I want you guys to start doing your own research. Google it. There's a lot of resources out there. But what I want to tell you guys, execute, because this is the time when you can make a lot of money. Money is cheap. Go ahead and buy now. Save your money. Stop buying dumb-ish. I'm not going to curse because it's YouTube, but I'm telling you, stop buying dumb-ish and buy real estate, buy stocks while they're low, so because they're going to come back up at some point. But most importantly, guys, execute. All right? So that's all I got for you guys today. MG, the mortgage guy, NMLS number 58700. Make sure you guys like, comment, share, subscribe, hit the bell for notifications. I'm coming back tomorrow night too. We're going to talk about the cost of waiting. All right. I'm going to break down. I'm going to go on the computer. I'm going to show you my screen and I'm going to show you what it looks like with today's interest rates versus you waiting. And if the rates go back up, and I'm going to show you how much interest that you will lose if you wait, if you do not execute right now. So that video, have your pens and pads ready. Tomorrow, I'll be back. All right? Peace.